Hello members of the Capital FX community. In today's video I'll be going through how to drop a trading plan. This was from the feedback session that I got from you guys. So part of like your trading journey is having a solid trading plan, and this will help you with your success in trading. So most people who fall by the wayside after 2 months, 3 months of learning trading, it's because they do not have a trading plan. So it's said that 90% of people who join the forex market will fail within 90 days, meaning they'll blow their accounts within 90 days, and only 10% and even much less continue trading beyond that. So there's a saying that goes, if you fail to plan, you plan to fail. So in this video I'll be helping you guys in drawing up a trading plan. So part of your success in trading is having a plan, but a plan that works. So also having a trading plan, it helps you to be clear in terms of your objective, what you want to achieve on a specific trade, and it also helps you to detail those high probable trading setups. The forex market is very volatile, and you should always be careful before getting into any specific trade. So part of drawing up your plan should definitely have your probable setups that you'd normally trade. So don't trade everything that you see. Alright, so you need to factor in your risk percentage, which is extremely important, guys. So like we do in Capital FX, we only risk between 1 to 3% of our entire trading account per trade, and we normally take about 2 to 3 trades a week because we swing trade. So it's important that you factor in your risk percentage in your trading plan. Okay, so in this next slide I'm going to be showing you different pointers to consider in drawing up your trading plan, and I'll also go through the charts and show you some examples. So things to consider when you set up your trading plan. The first point that you need to consider, what is the risk percentage that you're willing to expose your account to, and what is your reward? Alright, so please watch my trading view video, or how to use trading view. I do go in detail on how to use the risk to reward tool, but in terms of your trading plan, like I said in the previous slide, we risk anything between 1 to 3% in terms of our risk. And in terms of our risk to reward ratio, anything above 1:3 is a good risk to reward ratio. So for example, if I'm willing to risk 3% on my trade, I should be at least at a minimum be making 9% upwards on my reward side on my trade. And then secondly, so before I get to the second point, the first point is really important, because before you take any trade, you should be at least aware what amount you'd be willing to risk before jumping into any trade. And then secondly, what is my watch list? So watch list is basically what are the pairs that I'm going to be trading for that week or for that month. So just please try to limit to your pairs to a minimum. Don't find yourself trading 6 pairs at the same time or 7 pairs at the same time, because it's hard to really keep track of all the pairs if you're trading them at the same time. So what I do encourage and advise all the members of the community is to at least stick to 3 pairs. The first one being the US index, then and then 2 other pairs. Alright, so there is an exception. If you're trading gold, you might want to look at, if you're trading USD/JPY, you might want to look at gold, and if you're trading the Canadian dollar, you might look at oil. So that's the only exception where you might have more than 2 pairs that you're actually trading at once. And then thirdly, your price structure, guys. Price structure is extremely important. Price structure, your top-down approach, studying price action for what it is from the monthly all the way down to H4, looking at our key levels, trend lines, weekly trend lines, daily trend lines, inner and outer trend lines, and daily candle closes. Alright, so it's extremely important, guys, that before you jump into any single trade, I normally do this during the weekend when the market is quiet and is closed. I go through all the pairs that I traded, and I go through my top-down approach. What happened on the monthly? What happened on the weekly? Are there any signs of reversal that I'm seeing or potentially seeing on the weekly and the daily time frame? And then I start to do my analysis during the weekend, so I know what to expect in the coming week, so nothing catches me by surprise. And then what's important is the last point I made here, your daily candle closes, and I'll cover that when we go through the charts. And then number 4, your US index. Before you trade any pair that has US either as a quote price or base price, you should consider the US index first, because the US index gives us a picture of how the US dollar is performing overall against major currencies. So pairs that are directly correlated with the US index is USD JPY, USD SHEF, and USD CAD. And then pairs that are negatively correlated with the US index are Euro USD and GBP USD. And then the fifth point, after you have gone through point number 1 to point number 4, now that's when you now go to your individual pairs. So in your individual pairs, you go through the same process that is detailed in number 3, your top-down approach, studying where price is in terms of your key levels. Are we at a key area of resistance on the daily, on the 4 hour? Did we have a 3-pin rejection on the daily or 4 hours? And do we have an area of compression? And then if you have that, that's where you use your trend lines and your counter trend lines, like I've detailed in the other videos in the mentorship. And then also, are there any fibs that I can apply? What is my price structure telling me? Are we done with the uptrend? Are we now reversing? So those are the questions that you should be asking yourself when you are detailing your possibilities in looking for trade setups. And then number 6, you should have more than 3 conferences to take up a trade. So you should have more than 3 conferences to take up a trade. Anything less than 3 is a bit risky, so have more than 3 conferences to take up a trade, which will guarantee you confidence in trading the forex market. So right now I'm going to flip through the charts, and we're going to go through every single point that we have on our trading plan on the charts. Okay, so right in front of us we have Euro USD. It's my favorite pair. I like to trade this pair a lot. Alright, so in terms of the structure, so now let's go through every single detail that we had on our screen. So in terms of risk, we'll be looking anything between 1% to 3% exposure. 1% to 3% exposure. That's in terms of my risk. And then I'll take this long trade as an example. Just clear everything out here. Okay, so and then secondly, where's my watch list? So I've ticked that one out. My pair is Euro USD. And then thirdly, my price structure, my top-down analysis. So now we'll just use the daily and the 4 hour for this one. So in terms of my price structure, in terms of my key levels, number 1, I'm looking at my key levels. We had a weekly key level of 1.1000, which is a very strong key level. And if we look back, in the year 2019, this area played as a strong area of support. It was broken as support here, price broke it as support here again, price found support here, and then we saw support here of price, and then in the early days of November price found support here, and then so this area has been a really strong area of support, and we had a lot of rejection. If you can look here, we had a spinning top rejection, we had a nice hammer rejection here, hammer rejection, and then we had another hammer rejection down here. So in terms of my price structure, we are in an area of solid support right here, and what rather we should be looking for is any trades around these areas here. So in terms of my key levels, we had a weekly key area, number one, and then now let me explain the daily close principle. So this is an area of support, that's my first confluence, and it's also a key level. Then my second confluence is I have a Fibonacci retracement. So this is my big structure overall, swing low and then swing high. So from there to here, I had my big fib on the daily. And you can see, guys, clearly we had a 61.8 rejection, which is a very strong rejection. So that's my second point. And then my third point, we had an area of support here, and also had multiple rejection candles, hammer, spinning top, and then also had price rejection here, big fake out, big engulfing fake out, and then we had a bullish Marubozu. That's my third confluence. That's my third confluence for this pair here. So now let me explain the daily close principle. So already out of those 3 points, I'm already expecting signs of bullishness on this pair here. So I'll take this as an example because this was the trigger one right here. So this was a nice daily hammer. So after this day here, we can clearly see that price was rejected at this level here, clearing out any orders at the bottom here, and then price pushing upwards. So now if I just mark this area, let me just mark this area, this daily candle here, and then I'm going to go to H4. So H4 is much more clearer. So H4 is much more clearer. Let me just remove this one here. So on H4, this was the daily candle up here. You can see on H4, we had price break our key level with the hammer and closing just below it, So this was a big rejection candle because it closes the hammer, and then look what happened to price. Immediately we had a big engulfing candlestick formation pushing price back beyond our key level here, and this candlestick formation, bullish engulfing, it engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it engulfed more than 10 4-hour candles. And you know, guys, the principle, the bigger the engulfing candle, the bigger the move up that will follow. So it engulfed all of this price action here. So after seeing this bullish engulfing candlestick formation, we will now wait for a trade setup. So now we're on H4. Now we can pull up a fib to help us in taking our trade. So that's swing high, and then that's swing low right here. Point A, point B, waiting for a pullback in price. So like I always mention in the course, we prefer to take trades that retrace between the 50 and the 61.8. So that would be an area where I'd be interested in taking my trades. So I already marked out my area. Just remove that. I already marked out my area, and then I'd now come to either the 2 hours or the 1 hour. So I'll take the 1 hour. So I drop down to the 1 hour, and now things look much more clearer here on the 1 hour. Things look much more clear here on the 1 hour. 1 hour is here. And we also had a nice bullish engulfing formation here. So we would have taken a trade based on our trading style. We would have taken a trade at the close of our bullish candle, this one here, if you're taking trades on 1 hour. So when I pull up the risk to reward tool, we would have entered at the close of that candle right there. Then now in terms of targets, we would have targeted previous swing points. So this also is factored into your trading plan. So in terms of targets, we would have targeted previous swing points, point number 1 and point number 2. Point number 1, previous swing high as our targets. So entry would have been made at the close of that bullish engulfing right there. Then in terms of our targets, we would have placed it on our previous swing high there. And in terms of our stop loss, since we had this key area here, which was really strong, we would have put our stop loss just below that key area right there. So I'd normally risk about 30 pips on this trade, so just giving my trade breathing space. So I'd go for 30 pips on this trade. Then in terms of my target, I'd be going for that previous swing high here. So a total of 68 pips in terms of target. And in terms of risk, I'm risking 30 pips. Then in terms of my risk to reward, guys, you can see it is a 1 to 2.29 risk to reward ratio. It is close enough to our 1.3 risk to reward that we normally go for as a community. But I think this is a fairly good trade. And also, you could have also used the fib to assist you in placing your stop loss. So that was point A, point B, then point C. You can see we had a nice 50%, between 50 and 61% rejection, and then we normally place our stop loss just 10 pips below our 78.6. So our stop could also be there, giving our trade breathing space. And then this could have been also a nice opportunity down here. You see we had a 3-pin formation, 1, 2, 3, big rejection. So that could also have been a nice trade entry right here, right on our weekly key level. And also we could have placed our target right there on our previous swing high and even higher on that one. So now, guys, now you can see I've used the points that I've detailed for you guys in drawing up a trading plan on this specific trade. So looking forward on this pair, here's another setup that I'm seeing on this pair right now. So I have an area of compression right here. Also looks like a head and shoulders, shoulder, head, shoulder. And what do we know, guys? With areas of compression, we always wait for a breakout and a retest before we take our trade. So one thing I'm waiting for here is any breakout from this area here, and to get a retest sort of at this area of resistance. So if price is rejected around these levels here, I could expect price to drop low. So in terms of my targets now, for a sell trade, I'd be looking for swing lows. So in terms of targets, could be targeting this level here, and price even coming to our weekly key level. So in terms of confluences, the first confluence, we had an area of strong resistance, prices failing to break above. That's my first one. My second confluence, we have a area of price compression. Third confluence, we have a head and shoulders pattern, shoulder, head, shoulder, also having a big bearish engulfing candlestick formation, engulfing all of this price action here. So we could see price fall over. So, but waiting for a break and retest of this area and for price to drop downwards. And in terms of my counter trend line, my counter trend line rule, so that was my counter trend line just got broken and I retested it. So waiting for price to break this area, retest it and start falling over. So in terms of my risk to reward ratio, we could use pending orders. We could use a pending order here. Wait for price to break that level here. Then in terms of stops, placing, I'm gonna place a 30 pip, just roughly over 30 pips stop, just above this key level here. Then in terms of my target, I will be targeting this area, this key level right there. So I hope that one really helps you guys. So thanks so much guys for tuning in to this edition of the lesson. So drawing up a trading plan, guys, is extremely important. And also what's important after you've drawn up your trading plan is important to journal your trades. So please watch my other webinar where I go into details on how to journal your trades, which will contribute to the success of your trading. Thank you so much guys, and I'll see you guys in the next webinar.